Hey everyone. Let me know if my voice sounds weird through the VTF again like it did that other day. Because I'm on kind of the same setup. It's a bit muffled. Hmm. It seems to happen when broadcasting onto YouTube and the virtual trading floor at the same time. I don't have a solution for it. Need to try to work with the tech team. But if someone can post the YouTube link into the VTF, I would appreciate it. And if anybody's having any sound issues, if my voice sounds weird or something, you can click over to the YouTube where I'm gonna go ahead and assume that it sounds just fine. All right, on that note, I'm going to get started. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and a member of FINRA. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. I really don't like writing in those options positions into the position disclosure. It's like kind of annoying. It looks a little, I don't know, doesn't look aesthetically pleasing. Uh, but I've also got U Pro short, real small U Pro short. Cool. Let's go over to the videotape. Just give me one quick second on something. Okay, let's get started. So what happened today? Not a whole lot. Market's positive. We finished up a 0.5% or so in the SPYs. We finished up 0.16% in the Qs, so some weakness in the Qs, and up 0.25% in the IWM. So your SPYs are your winner today. SPYs are where the relative strength was, and that's probably coming from the Dow. The Dow names a little bit, which finished up 0.5%, just over 0.5%. So the game plan today was to not have big expectations, and I think that that game plan was met. It was pretty much like kind of a rangy, choppy type of trading session. That was my expectation, just because we're coming into a really big week. Um, it's a really big week for earnings season, yet on Monday morning, there's not really too much going on as far as reports go. Got a few interesting ones after the close here today and tomorrow morning, and things are going to pick up further after the close tomorrow, which is when we have Google and Microsoft, I think. And then Wednesday after hours, we have Meta. Wednesday at 2 o'clock, we also have the Fed, where they're widely expected to increase interest rates by 0.25%. And Thursday, we have GDP. So a really, really packed week, but not too much coming into today. We spent a lot of time in the morning meeting talking about the technicals of this market, how the trend is still certainly intact. The trend is bullish. It's very clear and obvious that we are in an uptrend. On Wednesday of last week, we were starting to extend a little bit to the upside. Thursday, Friday, and really today, even though today's a positive day, have all been corrective days, price and time correction. And that's just enabled this ADMA to catch up further. And if the trend's going to continue, if the bulls are going to maintain control, they should be trying to lift this market here pretty soon. Though I think a lot of that's going to depend on these earnings reports and how the market reacts to the Fed on Wednesday, and particularly, everyone's expecting the 0.25 point raise. That's probably priced in the market at this point, but it's going to be about what Jerome Powell says after in the press conference. So I think that's what the market is looking for and needs to digest in a positive way in order for trend continuation to occur. My tone and my thought process has certainly become more bearish, really starting in the beginning of last week. And I spent a lot of time last week talking about it, and my thought process really did not change over the weekend. It's just been really big moves into earnings season, where my expectation is that with this earnings season, even if a lot of the reports from like big tech are okay, that there is real risk to the downside, and it's pretty much exactly what we saw and exactly what we expected, and then the thesis was confirmed with Netflix and Tesla last week. So we'll see if that just continues through this week, and I'm positioned for it. I was turning on options last week. I wanted to turn them on prior to Tesla and Microsoft, sorry, Tesla and Netflix, but I didn't quite get them done to buy some puts as a pure gamble into some of these reports, um, to kind of test this broader thesis that I'm talking about here, where I think the risk is really to the downside on these earnings reports after such big moves. Obviously, any one individual name holding a position into an earnings report is gambling, and I'm the first to say that the puts I put on, and right now I just have them for Meta, um, Microsoft, and Roku that are all reporting this week. It's 100% gambling, but the thought process is that even if the individual names are gambling, if my actual thesis is correct on how this earnings season plays out, that some of them will go up, some of them will go down, but that there is more risk to the downside, and we'll see if I can get myself to make a few bucks. But it's really just an experiment for me. Not too big on any of those positions, and it's for learning as much as it is for putting some money where my mouth is as far as this thesis goes. But I'm also, really being conservative on adding new longs. It's been such a big move this year. I mentioned it last week. If today was the last day of the year for 2023, this year would go down in the record books as one of the more bullish years that the market has experienced over the course of the last 100 years or so. And that's great. And we're only here in July. And it still doesn't mean that the market can't go up. It certainly can go up. I just I think that we maybe got a little bit ahead of ourselves, and we'll see. At the same time as that's the thought process, I absolutely have to respect the technicals, and the bullish technicals are still 100% intact. 100% intact for the S&P, 100% intact for the IWM, and really entirely intact still for these Qs, though I've been mentioning that the QQQ candle from Thursday, which is particularly weak and was brought about by Netflix and Tesla doing pretty much exactly what we predicted on mediocre reports. Um, that day is kind of a day to take notice of for the Qs, and bulls need to recapture that. And they need to recapture it soon. So they need to get back above 384, and the market technicals will start looking great again for the Qs. But for the moment, it's a technical pullback in the Qs into the equilibrium zone, which is still fine. We are still in a pattern of higher highs and higher lows for the NASDAQ as well as the other indices. There's big support in this 370 to 372 area that we'll monitor if we get closer to it. And that's pretty much it. So I just kind of really thought that today was going to be a range day. That turned out to be entirely accurate. It's a range day where the indices close a little bit in positive territory. Trying to trade the indices too much today was very difficult. I did trade a little bit of UPRO back and forth. I had been short T triple Q last week and did well with it. I fully liquidated that final position in the last trade I took on. I was all out, I think, Thursday by the close, and then we gapped up on Friday, and that gap up was a good excuse to short the common gap for the Qs. I think a few of us took that. That trade worked really well. I closed that position into the close, and then this morning when I saw that we were up a little bit pre-market and I still wanted to have a little bit of short exposure on my books, I decided to, instead of reshorting T triple Q, I decided to short UPRO instead, just to mitigate a little bit of the one-off risk on, Meta reporting a fantastic earnings report, or Microsoft reporting a fantastic earnings report, or some sort of new buyback or something that actually rips those stocks higher when it's just such a big percentage of the Qs themselves. So that's kind of the thought process there, but there wasn't really too much to talk about. Again, the intraday price action on the S&P today was really sloppy. I ended up flattish on that UPRO position on the day. Um, my best trade of the day, intraday today, was Neo, which was a call out, I believe, from Rich in the morning meeting, or maybe right after the market opened. I mean, you obviously certainly called it out after the market opened because that's when I got involved. It would not have been on my radar otherwise. $11 was a level. It had just traded above $11 as you called it out, or through $11 as you called it out. I typed it up. I was like, oh wow, I really like this volume profile here. I really like the $11 level on the daily chart, and that's enough for me to get involved. So I bought some stock. I think like my price was like $11.02 or so. Utilizing the low of the day, or a penny below the low of the day is usually where I like to have my stop be. as my stop loss. The ADM hadn't caught up yet, but it caught up pretty quick, and that worked really well. Built out a nice little bull flag, had a technical pullback when the market weakened a little bit, but that just created another higher low at 955, and it really woke up and worked. I basically just had a game plan to 12 bucks on this thing. I kept the piece as a runner as it got to my target, and then I just liquidated the position into the close. So great trade in Neo for anyone who was involved in it, and big shout out. I believe I'm giving the credit in the right place to Rich on the communication and making me some money. I love when the traders on the team make me money. So that's great. So there is Neo. I lost a few dollars shorting AMD, just a little bit. And really, the only reason I lost money in it was because I was greedy. It moved enough for me to cover my risk. I just was trying to be greedy with it because I wanted to have the short in the books if we started really rolling over. And there was a certain point today, particularly if you looked at the Nasdaq, where even though my general thought process was a range day, there was a time here when we broke down at 950, and then we're kind of had this bearish consolidation beneath yesterday's low that the ADMA was catching up on, that today could have been a pretty weak day for the Nasdaq and could have given some downside follow through from Thursday and Friday's selling. That ended up not being the case. We recaptured yesterday's low and followed through with what I thought was the highest probability situation in the morning meeting today, which was just a sideways range bound trading session. But at a certain point here, the Qs were looking pretty bearish, and AMD was very relatively weak. AMD was weak right off the open, started leading the Qs lower. We see that a lot with semiconductor names. And AMD had an inside day on Friday right at this like key 110 area support. So when I saw AMD be weak and I saw the Q starting to break down, I shorted some AMD at about 110. I think my price was a little bit under 110. Basically using the day high as an out, which is about $1 worth of risk. I got to move for a buck and a half. So more than my 1-to-1. And again, I easily could have fully covered my risk and lost nothing on it, but I chose to have a game plan that was particularly greedy. So when I did get stopped out, and I got stopped out once those new highs came in, I think at 10 after 11, um, I got stopped out for a loss, a small loss. I covered only a tenth of my position at about 109. I had another bid at about 108.50. The low was 108.55. I didn't quite get filled there and gave that position back, got stopped out, took a little bit of a loss, but I'm totally fine with it. Followed the game plan that I chose to have, which was taking my kind of portfolio of having long positions into consideration and choosing to be greedy there. And and that's it. And that's it. It's exactly what I was looking for. So outside of that, nothing really to talk about. Just kind of managed my swing positions. I got back into very small Apple. I got back into a very little bit of Unity, which I'm keeping both of those. I have a little bit of this U Pro short on my books. Got some options on my books. That's a new one for me, relatively since last week. And everything else is normal. So at this point, just kind of waiting to see what the rest of this earnings season looks like, and waiting on the Fed and waiting on GDP. So that's all I got, and I'm happy to take a look at any questions that any of you guys have. Scrolling up in the VTF, the first thing I'm seeing here is from Dave S. at 4:15. I wanted to ask you about a trade from Friday last week. Both you and Josh were shorting the TQQQ. I wanted to know what decision-making process was behind reloading the trade with additional risk. I definitely didn't do that. I definitely didn't take additional risk. I may have reloaded to recapture my risk and kind of for like the cash flow stuff that I always talk about. But I'm pretty confident that I did not short for additional risk outside of if there's a little pop in the very beginning of the day. I had a game plan to get heavier if the Qs went against me, especially in the beginning of the day, which I probably did. But there was no way that I added on like additional risk midday. I can't speak for Josh. I don't know what Josh was doing, and Josh is not here today. Um, it looks to me that level of shorting and then covering worked multiple times that day. and I wanted to know if there was any additional information you found that allowed you to short again with more confidence, or if you will just do that due to it being where you can add risk without affecting the trade's probability of being a loser. Any insight would be appreciated. Yeah. So again, for me, and that was in the teachable queue, but we can just look at the queues. We gapped up really big on Friday, and what I was looking at was Thursday, like I said, was a day to take notice of, and you can see the 5 minute chart here from Thursday, just very weak off of Tesla, off of Netflix. And if the market was going to stay weak, which was my thought process, we shouldn't really be able to recapture too much more than like 50% of the previous day's big negative candle. So I was thinking that the Qs were going to hold 380 to 381 pretty much on the upside, that area. And I had a game plan to build into the short heavier if we popped to 380.50 or closer to 381. We never did. We gapped up pretty big that day, shorted the gap, shorted the common gap, basically looking for a gap fill. I wasn't overly greedy with it. I think I kept like a pieces of runner or something like that into the close or to near the close. But that was pretty much it. I think, and again, there's been a long weekend since then. Not a long weekend, a regular sized weekend, but I changed time zones, so my brain's a little bit foggy this morning. I may have gotten all out of that position into this 10:30 move and then re-shorted somewhere around midday. But that was just me taking my stock back. No new add on risk, just taking my stock back and looking to kind of work the range a little bit if it wanted to do that. And I was able to do that a lot throughout the day. I think if I go back to the T triple Q chart, I was re-shorting like 43, 35-ish each time it got back up there. So I was able to short some here at like 11:10 and 11:30 and then more around here, at like 1:30-ish and kept getting those pullbacks on it and they just kind of kept putting a little bit more and a little bit more money in my pocket. So that's what I did there. Again, can't speak for Josh. Josh will be back tomorrow and I'm sure he'd be happy to answer what his thought process was. Scrolling through, next from Ramon. Thoughts on the following trades, please. I shorted AMD at 10.10. Shorted AMD at 10.10. All right, you're a little late on that trade. Versus the high of the 10.05 candle. I got my risk cover. That's good, and I got stopped out. Glad you got your risk covered. I tried again at the 10.35 candle. Versus that candle low. Oh, never mind. I missed part of your question here. So you shorted AMD at 10.10 versus the 10.05 5 minute candle, and then you flipped long. Sorry, I somehow misread your sentence here. Let me start over. So you shorted the 10.05 candle at 10.10 versus the 10.05 minute high. So you got stopped out. Then you flipped long at 10.25 versus that candle low, and you got your risk covered and stopped out. I tried again at 10.35. Assuming to the long side. First that candle low. I got stopped out for a small loss. I tried at 10.45. You are over trading, sir. Tried at 10.45. First that low. I covered my risk and booked profit on the way up and sold most of my remaining position into the $111 level. I added back what I sold at 11.40. Versus the 11.35 low. Covered my risk on this new position and sold on the way up to book profit. I sold most of the remaining position at 205. Let's fast forward to 205. I'm going to raise my stop to the 1 o'clock low, and I was stopped out at 3 o'clock. Okay. I set my profit taking limit orders at 25-cent increments. So that I like. I like that you're trying to work the position for cash flow. It just seems like your initial trades here are overdone. First, I think you missed the initial short, which is the one that I was involved in for the real actual breakdown when the market was weak. When this thing bounced back here, I remember at 10:05 communicating that I'm looking for the stock to potentially pivot. You want to make sure that you're getting a signal off that pivot. And it might have been, and if this was what your trade, it makes me like it. If this was the idea behind your trade, it makes me like it a little bit better. It may have been that at one point during the formation of the 10:05 candle, it was looking like it was going to create a shooting star with a little bit of a topping tail into the EDMA. And that I would like as a short. You know, you want the signal that the pivot's actually coming, but this candle closes on highs. So there's no like continuation upside tail or upside shooting star into the ADMA where you could be shorting versus that tail high as the spot where it appears sellers are regaining control from buyers to drive the stock lower. To me, it just looks like you see the moving average there. You want it to pivot there. I wanted it to pivot there because I was already short, and you're kind of taking the short. I just don't like it. I don't see the signal. Like I totally understand the idea. This is where the stock could pivot down if it's going to give continuation. But it never actually gives the information or the signal that it's going to do that, which is what you want to actually short. So that is one. And then it looks like you got stopped out of that. And then at 10:25, you're going long. I really don't see the trade there. Um, I don't see the trade. There's an inside five and up that breaks higher at 10:20. But I don't like it. The stock is relatively weak. It's into that right back into the equilibrium area. I don't like that as a long. That's not the type of inside five I want to trade. But you're getting in at 10:25. I don't even see a trade here. There's a little bit of a doji at 10:25. Um, and you're long versus the doji low. I think that you're forcing that trade. I think you're forcing that trade. And then you try again at 10:35 versus that candle low. I think you're forcing the trade. It's 10:30 plus. The stock bounced back more than it should have if it's going to give downside continuation, which is really the trade. I don't see the long at all, honestly, from a big picture thought process. Maybe you're thinking, hey, just took everybody out below 110 and 110 was the level and now it's back above and there's a failed breakdown could lead to an upside move and you're trying to take advantage of that. Okay, it's very tricky. It's a very tricky trade. And you tried it once, you tried it twice, you tried it three times. It's just too much. I'm really glad that the last one, you caught and you were able to get a little bit of a move off of it, cover your risk, make some money back for yourself on maybe some of the trades that didn't work out as good. But it seems to me like you're really forcing these trades on signals that I don't think are signals. These are little doji candles that are happening at an equilibrium point for the stock where there's a lot of price congestion. I think more times than not, this is where your price action becomes just kind of very random and it's hard to have a consistent edge for yourself on the trade. When you finally caught it, I like the game plan. Like so, when you're telling me that you were, working in like 25-cent increments of selling stock and trying to buy it back, I like the game plan. I don't like the trade. So if you could take that game plan and apply it to trades that I think are better trades, just being totally honest with you, then I think that that would be really positive for you. Um, so that's my feedback for you on it. I really appreciate the question, and I hope it helps you to improve. Next is on Google. You're bringing up so Google at 10:05 at 10:05 versus the 950 low. I like it. I think you're a little late on the entry, but I like it. Um, I guess you know what? Yeah, maybe a little bit late. Probably should be involved with the 10 a.m. candle. So first of all, Google is like the strongest name that's out there, strongest FANG name that's out there. Pulls back to the ADMA on the 5-minute chart. So good technical corrective action. Gives an inside five and up. And an inside five and up into the ADMA is one of my favorite trend continuation patterns. You're combining it with relative strength. The market's not really for or against you at this point. Actually, you could probably make an argument that the market's against you, but it's pretty neutral. I think you want to be executing on this 10 a.m. candle when the inside five breaks up. But going long in this area versus the actual pivot low and where it occurred, I like it. So you got your risk covered. You book some profit on the way up. You raise your stop to the 1035 low. Okay. So that's a cheat on my trailing rules. It's a cheat specifically on the third rule, which is not the end of the world. I actually cheated on the third rule today in my Neo trade, which I communicated to you guys. You just want to really make sure that you understand that it's a cheat. Um, and most of the time, if I do that, I don't like to do it with my full position, even though I did do it with Neo with my full position today. But then the trend couldn't continue. The market was weaker, it was going sideways. That low breaks and you get stopped out. I think that that's a great job. I like your trade here in Google. And then final trade you're giving me is Nvidia at 11:35. Hate the time of day. Versus the previous candle's low for continuation trade. Okay. Yeah, this one I get it. It's not the end of the world. You're seeing like a kind of a pivot come in on the ADMA right after the stock just broke out. So you're looking for trend continuation there. Um, it's like a very solid. Like I like this actually more than some of the AMD stuff that we were just looking at before, where it seems like you were kind of forcing it. But I would call this like a very solid like C plus trade at best. You know, and the reason for that is that the time of day here is not good. The market's not being supportive really of the trade. What's Nvidia's daily chart look like here? Nvidia's daily chart's not that bad. Got some pretty big support in this 440 area that the market was testing this morning, and it just kind of broke higher above that. Um, and Nvidia's still been really strong on the daily chart. I just don't like the time of day to be overly focused on 5 minute candles at this time of day. It's just really tough. I think trading 5 minute candles and I get what you're looking for. You're looking for continuation here because it just broke out, but if you're trading like a 5 minute continuation candle at 11:30, you kind of really need it to be like one of those like incredibly uptrending like news-based earnings names in order to think you have a shot at success. Really don't like 11:30 a.m., midday candlestick pattern trades. And again, I get it. I think that this is a legit trade here. I just like I'm saying, I think it's just like a C plus. Um, it's not wonderful, but it's a legitimate trade, and it's because the time of day, the volume, I guess, did pick up a little bit, but the name's not really in play on the day. And the time of day is just so hard to trade 5 minute chart patterns here and expect to be profitable, in my opinion. So that's it for you. I like Google the most, I like AMD the least, Nvidia is kind of somewhere in the middle. But again, I hope all that review helps you the learning process, and I really appreciate the question. From Ben here, I went long Neo at 934. Okay. When you called it out, I upticked into the stock because I was worried putting an inside bid would cause me to miss it if the stock was rising too quickly. My price was a little bit worse than yours. I got in at $11.05. Okay, it's not terrible. My stop was a penny below the low. So according to my game plan, I had to sell half. According to my game plan, which is to sell half a one-to-one and trail the rest. I did not get my risk covered until 10:05 when I raised my stop and therefore at a different one-to-one. I was able to sell immediately. I noticed you selling some very early before you could have gotten your one-to-one. What are your thoughts on my execution for this trade? Was an uptick the right way to enter? Also, can you talk a little bit about trimming the stock before the one-to-one? Sure. Um, so yeah, no, I think your execution is fine. Sometimes I like to do if I'm trying to balance making sure I get a position with getting a good price, is I take the offer on some and I bid in on some. So I kind of combine it, right? I take the offer on a little bit and then I put in a bid. So if I don't get my bid filled, then at least I got some stock. And at least if I do get my bid filled, at least I didn't, take the offer on everything. But I think that your execution is just fine, especially if you really liked it and it did look really good. So that's my feedback on the execution. As far as me sometimes selling stock at less than one to one, So what I do a little bit sometimes, if you ever see me doing that, is I'll take a very, very small percentage of my position, and I'll kind of do like a cash flow sell before my one to one on it. Um, so if I've got, 50 cents worth of risk and my one to one is offered out 50 cents above, and you see me just sell like a piece at, I don't know, 25-cent profit, just putting some basic numbers out there, the plan is going to be 100% to rebuy that stock. And I'm already kind of thinking about, cash flow buying and selling on small percentages as my game plan around the one to one idea. So something I'm playing with a little bit there sometimes. So that's really what I was doing there, and I hope it helps. And I appreciate your question. I think looks like you traded it pretty well. Yep, no problem. Um, yeah, 26 in Rivian's been a headache. Looked like it really wanted to go on a couple occasions today, and then just this bar here was nasty. That 950 bar. But I think that 26 is more or less still intact. Um, from Robert over on YouTube. Would I play a Tesla RDR setup today? I talked about that actually in the morning meeting. I mentioned the Tesla RDR as a potential trade, but I also mentioned that it got downgraded, so it had me a little bit nervous about it. But I did mention that as a trade that you could take. It's not that extended on the daily chart from the EMAs. However, I was more confident once I saw 50,000 share bids step in right at the open at the 255 level. Yeah, I would not be overreading the tape on 50,000 share bids in Tesla that traded 136 million shares today, though. Um, and I look, I love. I'm a tape reader by way of my trading. I just think that the market environment has changed, and I find that traders do more disservice to their positions by overreading things in the tape that are not actually important compared to the benefit that they get from it in this day and age. Also, I was expecting a flat day in the market, so max risk on Tesla would be as a B class setup. Okay, yeah, for sure. So again, I actually mentioned the potential of an RDR in Tesla today myself, and my biggest negative about it was that the stock got downgraded. So you're potentially finding a little bit of a negative catalyst there on Tesla on that downgrade. But otherwise, I like it. A day three to the downside after that earnings report. That earnings report was not terrible in my opinion. Stock had a really good snapback today, and I agree with you. It's probably like a B level setup, but totally on board with the thought process. All right, gang. Anything else? Looks like I got through everything in the VTF. I got through everything on the YouTube chat. So if there's nothing else, I'll wrap it up. I'm a mess over here in Los Angeles trying to figure out my eating and sleeping schedule. It's just it's not great. It's difficult because my wife is working like kind of LA time out here and I'm trying to work like New York time. I'm going out to a dinner with some of her coworkers today, but it's at 6:45 a.m., 6:45 p.m. local. So for me, that's going out to dinner at 9:45. That hurts. That hurts. I'm ready for dinner right now. What time is it? 1:45? It's a disaster. All right, everybody. So I'll wrap it up. Have a fantastic night, and I'll see you all tomorrow.